Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, May 11, 2009. This week started with a burst of risk aversion as the gains seen in risk sentiment to end last week reversed. The Euro-Yen pair, for instance, saw a 250 pip move downward in today's session as global stocks were down and the pan-European Dow Jones Stoxx 600 index declined 1.4%. The decline was likely a burst of profit-taking after stocks in Europe posted a 5% increase last week, the 8th time it has posted weekly gains in the last 9. The euro found support at the 132 level. The dollar-yen pair, meanwhile, slid 150 pips from its open, extending the losses it saw on Friday after the pair tested the 99.60 level. There was some trepidation regarding negotiations that the Fed had with major banks prior to the stress test results being released and the fact that the Fed scaled back some of its capital requirements. Still, today's decline in U.S. stocks was led by recovery-sensitive categories, including financials, energy, and industrials. There were no major releases from both the U.S. or Europe. In a business confidence survey from Australia, the confidence index declined 1 point to -14 for April, though it had been at a record low of -32 just in January. Business conditions, meanwhile, improved to show a -10 reading compared to March's -17, and the report showed businesses seeing higher sales, profits, and employment. The Aussie-US dollar pair slid today despite the better Australian business conditions news, as stocks and commodities fell, pressuring commodity and risk-sensitive currencies like the Aussie, Kiwi, and Loonie. Last week, the pair rose 360 pips, and today's action may very well be a pullback from that rally. The euro-dollar also saw a retracement in today's trading after the pair tested the area around 1.3670. On Friday, the pair surged on a better-than-expected U.S. non-farm payroll release and higher stocks, but today, with global stocks down, the pair slid. Still, today's retracement was rather shallow and could bode well for further euro strength if equities turn around the rest of this week. The pound retreated to the 1.5070 level against the greenback in today's trading, falling about 160 pips from its open and high near 1.5250. The pair did not come close to testing its low from Friday, instead retracing about 61.8% of the 270 pip rally seen on Friday. There are several important releases to come out this week from the UK, including employment, retail sales, manufacturing and industrial production, trade data, and the quarterly inflation report, which will all have an effect on how the pound fares the rest of this week. In a release from Canada, the new housing price index decreased 0.5% in March, which pushed the annual rate down to -2.4%. Several provinces attributed the decline to lower material and labor costs, while Vancouver and Victoria reported lower prices due to competition and slow market conditions. The US dollar-Canadian dollar pair, behaving similarly to the other pairs we have shown already, saw a rise in favor of the greenback as weaker stocks and lower commodity prices pressured the loonie. The pair had hit a 6-month low on Friday below 1.15, but as of 5 p.m. Eastern was about 180 pips higher than that support, trading at 1.1670. The pair was running up against a short-term downward sloping level of resistance there. Tonight, Australia will release data on home loans, and the UK will post its BRC retail sales monitor and its RICS house price balance, which will be followed overnight by production, trade, and further house price data. Also overnight, Germany will reveal its final version of consumer prices along with its wholesale price index, while Australia posts its annual budget. Tomorrow, both Canada and the US will release their trade balances, and the US will also post its Treasury budget for March. And that wraps up this Monday edition of our broadcast. Thank you for joining us here at CMSFX.com, and happy trading.